Alibaba, the Chinese e-commerce giant, has recently undergone its biggest overhaul in 24 years, splitting the company into 6 separate entities. The restructuring is seen as a move to comply with new regulatory requirements from the Chinese government and to address concerns over the company's dominance in China's tech industry. Under the new structure, Alibaba's e-commerce business will be split into 2 separate companies, one focused on retail and the other on wholesale. Additionally, the company's cloud computing business will become a separate entity, as will its digital media and entertainment businesses. Finally, the financial technology arm of Alibaba, Ant Group, will also be separated into 2 separate companies. This move comes in response to increased regulatory scrutiny from the Chinese government. In recent months, the government has cracked down on tech companies in the country, particularly those seen as wielding too much power and dominance in their respective industries. Alibaba has been at the forefront of this scrutiny, with its founder Jack Ma coming under fire for comments he made in October 2020 criticizing the government's financial regulation policies. In addition to regulatory pressure, Alibaba has also faced criticism over its alleged anti-competitive practices. In April 2021, the State Administration for Market Regulation, SAMR, fined the company a record $2.8 billion for abusing its dominant market position and preventing merchants from using other e-commerce platforms. The split into 6 separate companies is seen as a response to these concerns, as it allows for greater transparency and accountability across different business units. It also aligns with the Chinese government's push for more regulation and oversight in the tech industry. However, the split could also have some potential drawbacks. One concern is that the separate companies may not be as effective at sharing data and resources, which could hinder innovation and growth. Additionally, it remains to be seen how the split will impact the overall profitability and competitiveness of the company. The future of Jack Ma, who has largely been out of the public eye since his critical comments in 2020, is also uncertain. Some speculate that he may have been detained or restricted by the Chinese government, while others believe he has chosen to keep a low profile in response to the increased regulatory pressure on Alibaba. In conclusion, Alibaba's split into 6 separate companies is a major move for the company and the Chinese tech industry as a whole. While it is seen as a response to increased regulatory scrutiny and concerns over anti-competitive practices, it also poses potential challenges in terms of innovation and profitability. The impact of this restructuring will be closely watched in the coming months and years as the tech industry in China continues to evolve. Future aspects. Alibaba, the Chinese e-commerce giant, has outlined its future strategy, which includes a focus on expanding its business beyond China and investing heavily in technology and innovation. The company's strategy is aimed at maintaining its dominance in the rapidly growing e-commerce market and staying ahead of competitors in the tech industry. One key aspect of Alibaba's strategy is its focus on expanding its business beyond China. The company has already made significant investments in Southeast Asia, India, and other emerging markets, and plans to continue expanding its global footprint. This includes investments in logistics and supply chain infrastructure, as well as partnerships with local businesses to better serve customers in different regions. Another key focus of Alibaba's strategy is technology and innovation. The company plans to invest heavily in areas such as artificial intelligence, cloud computing, and big data analytics. This investment is aimed at improving the user experience and providing more personalized and efficient services to customers. In addition to its technology investments, Alibaba is also focused on improving its environmental and social impact. The company has set ambitious sustainability goals, such as achieving carbon neutrality by 2030, and is investing in renewable energy and green technology to achieve these goals. One of the challenges facing Alibaba's future strategy is increased regulatory scrutiny from the Chinese government. The government has been cracking down on tech companies in the country, particularly those seen as wielding too much power and dominance in their respective industries. Alibaba has already faced significant fines for anti-competitive practices, and the government has indicated that it will continue to monitor and regulate the company's activities. Another challenge is increased competition from other tech giants, both in China and globally. Companies such as Tencent and JD.com are vying for a larger share of the e-commerce market, while global competitors such as Amazon and Google are also expanding their presence in China and other emerging markets. Despite these challenges, Alibaba's future strategy is focused on continued growth and innovation. By investing in technology, expanding its global footprint, and improving its sustainability practices, the company aims to maintain its dominance in the e-commerce market and stay ahead of competitors in the tech industry. In conclusion, Alibaba's future strategy is aimed at maintaining its position as a leader in the e-commerce and tech industries, while also addressing challenges such as increased regulatory scrutiny and competition. By focusing on technology and innovation, expanding its global footprint, and improving its sustainability practices, the company is well positioned to continue growing and evolving in the years ahead.